Hello, my name is Gary Kamen, and welcome to this special Trends and Futures grain report called What We Watch Now. If you trade grains, then you know the coming months could be very choppy. So let's see what we will need to be watching to make sure we don't get all chopped up. With the June 30th release of the USDA's acreage report, we now know what farmers are managing in the fields here in the U.S. In summary, corn is up 5% from 2010, beans are down 3%, all wheat planted is up 5%, and all cotton planted is up 25%. Looking at June pricing, we saw September corn open Monday, June 6th at $7.31 and close Friday, July 1st at $6.06. September beans opened June 6th at $14.03.5 and closed July 1st at $13.09.5. Finally, September Chicago wheat opened June 6th at $8.19 and closed July 1st at $6.12.25. Nice if you were short like we were at Trends and Futures. So now what? We'll now need to deal with Mother Nature, reports like crop progress and WASDE, big money movement as in the Commitment of Traders report, and last but not least, our friends in the media. To start with, Mother Nature will be lending her hand with regards to how the U.S. harvest will look. Not even the swamp dealers have the ability to control the weather. At least I don't think they do. A very long-time customer of mine happens to be a farmer in northwest Illinois. I had an opportunity this past weekend to hear what he sees in his fields. Here is what he said. Locally, the crops are looking good with corn over his head and soon to tassel. Everything still looks green except for wheat and oats as they are ripe and ready for harvest. But he said under the surface there are things going wrong. Some of them are big. The soybeans haven't grown a bit for the last 10 days or so. Short beans are hard to harvest. That shouldn't happen in July. The ground by him has a lot of cracks in it and is hard as pavement. He mentioned he is running out of water. He has not had any decent rain since June 22nd when it rained 1/10 of an inch. The last good rain he said he had was June 15th when he said he had 1/2 inch. There have been a few isolated showers over the last 2 weeks, but most have not amounted to much. Corn needs rain as pollination begins very shortly. Yields will be cut if there is little or no rainfall when the tassels and corn silks emerge. The temperatures have turned hotter. I could attest to that because Chicago's hot, with daily high temperatures now running into the upper 80s and low 90s. This is too hot when the water levels are running low. Finally, there hasn't been much wind as of late, but there was some the end of June and the beginning of July. We expect the wind to pick up strongly by July 27th and 28th. If rain is short, this will make the problem worse. This is again northwestern Illinois. I'm sure you've heard about Texas and their extreme dryness and heat. So weather could help or be a problem for yields in the coming months. And when you see we have a good rain, especially on LaSalle Street at the Chicago Board of Trade, you'll see corn prices, wheat prices, and soybean prices could drop. And if we have weather reports that show 8 to 10 days of heat and dryness, the prices of grains will come up. Now, reports coming out of the USDA will be closely watched. Crop progress released each Monday at 4 p.m. Eastern Time is important, and I cover that report every Tuesday in my grains position update, as well as today's WASDE report. We also have WASDE reports coming out August 11th and one coming out September 12th. Now, in today's WASDE report, it showed U.S. wheat supplies for 2011 and 12 are raised 90 million bushels. Global wheat supplies are projected at 0.9 million tons higher. U.S. corn beginning stocks are raised 150 million bushels, reflecting changes to 2010-2011 usage projections. Ending stocks for 2011 and 12 are projected 175 million bushels higher to 870 million bushels. Global coarse grain supplies for 2011 and 12 are projected at 10.3 million tons, mostly on higher beginning stocks and production in the U.S. U.S. soybean production is projected at 3.225 billion bushels, down 60 million due to reduced harvested area. U.S. soybean ending stocks are projected at 175 million bushels, down 15 million. And global soybean production is projected at 261.5 million tons, down 1.3 million, mostly due to lower production in the U.S. Also, we need to see how big money is moving through these markets. First, analyzing the COT legacy report, we see that on Friday, June 3rd, commercials were net short corn 395,045 contracts. And by this past Friday, July 8th, commercials were 215,125 net short. That's a drop of almost 200,000 contracts. In beans, we saw on June 3rd, commercials were 100,113 contracts net short. And this past July 8th, there were 47,513 contracts net short. Now with wheat, on July 3rd, commercials were net long 3,103 contracts. And on July 8th, we're net long 55,729 contracts. Now you're probably thinking their net long grew as the market dropped because you know wheat prices have been coming down. That's correct. And as you also know, the charts that I will cover below present the disaggregated report, which I find much more helpful and transparent. For detailed information on the new disaggregated report, visit Trends in Futures at www.trendsandfutures.com. And last but not least, our friends in the media can lend a hand. This past Saturday, July 9th, the Wall Street Journal had a headline that said, "China's hunger for corn turns markets on ear." See their attempt at humor? And the article stated, "A China buying spree for U.S. corn is putting on display the ability of Beijing to reshape grain markets as well as the cost of food globally." Scary, isn't it? I hope you realize that the media's main focus is sensationalism. That has been their main theme for years. Take what you read with a grain of salt. Let the charts guide your actions. I cover all the points above at trendsandfutures.com every day, along with technical analysis. Now, let's go over the weekly charts for grains. So here's our weekly chart for corn. It's a 5-year chart. You got 2007, 2008, 2009, 2010. Here's part of 2006, and here's 2011. We see back here 2006 how the market came up. Here's the week of the July WASDE report for 2006. The week was up. We had a little correction here, then the market came back up. Here's the July WASDE report for 2007. As you can see, this is for the week. The market was up. 2008, July WASDE report, the market was down. Not much activity caused by the July WASDE report in 2009, even though after the report came out, the market was up just a little in this range here. 2010's July WASDE report. In corn, you see how the market came up. As you can see, the market came up and never looked back. And to note, this is October. This is the October WASDE report that week. The market actually gapped up, filled that gap, and then again, the market never looked back. So you see how the WASDE report can affect the markets. And you see how the corn market was in a range. This is a weekly range now, between 450 and 350, all the way from January 2009 to about August 2010. That's a year and a half of jumping around between 350 and 450, as you can see here. Now, as many of you know, I'm an advocate for the COT report. I don't believe in developing a COT index or anything like that. I believe in just looking at the COT report and seeing what's going on with the large spec, commercial, small spec, and then, of course, the disaggregated report. This is a report that was developed back in September 2009 to address the issue of swap dealers and manage money. So what lies beneath every major trend? As you can see back here, the market started coming up, and we saw increased selling by true commercials, increased buying by managed money, and of course our swap dealers were extremely net long corn up in here. In the old legacy report, you see commercials coming down here, in large spec coming up here. This red line is made up of actual true producers and swap dealers. So this is taking place, and here's the market coming up. Now, as you see the slight liquidation here and here, you see how the market settled down for a while, and then not too long after, you see increased selling and buying once again on both reports, and the market takes off. Again, liquidation causes the market to come down, and in this section here, I highlighted this area here to highlight the range here. And you see when the market on a weekly chart comes up off the bottom of this range, you see what's going on with big money. And of course, if you waited to this area here, when you saw the breakout here, this is incredible, folks. This is a very nice way to sleep better at night knowing big money is supporting this move. As far as I'm concerned, all I look at now is the disaggregated report right down here. And all the weekly charts you find at Trends and Futures present you with the disaggregated report, along with some technicals that work very well with the COT report. In my beliefs, the COT is not a technical indicator. It's a fundamental. It's telling you what the big money is doing in the markets, and that's important to know, as you can see here, for catching major trends. So that's the corn weekly chart. Now let's take a look at soybeans. Now with beans, you see here's the July week for the WASDE report. Very similar to what happened in corn. Here's 2007's July WASDE report. That was that week. The market came up, came back down, and came back up again. July WASDE for 2008. Everything was coming down then. WASDE report for 2009. Market came up and then came down here. Here's our July WASDE report for 2010. Right in here, this week right in here. Again, very similar to corn. You see the market came up, didn't look back. Now, of course, we see a weekly range here in soybeans. But just like corn, look at big money movement. Commercials, which here is made up of swap dealers and commercials. And here's our large spec made up of managed money and other reportables. Looking at the disaggregated report, you see what's actually happening here. Swap dealers have been long this market for some time. Managed money starts actually adding to net longs. True commercials start adding to net shorts. And the market takes off. And you could go all the way through this and see what's supporting this move up and what's supporting this move down. Liquidation. You get to this point in here, and you see how the market gets into a range of between 8 and 11 here. Market comes back down. And for a while, the market was in a range. This is actually between 9 and 11, as you can see here. Breakout. Extreme buying, extreme selling on both reports. And here it goes. You want to catch major trends? Look at the COT disaggregated report at trendsandfutures.com. And the last market, of course, we're going to look at on a weekly chart is Chicago wheat. Now, Chicago wheat has a July WASDE report for 2006 right in here. 2007 is right here. 2008 is right in here for July WASDE. July WASDE in 2009. Look at the week up, and then the week came back down. Now, the July 2010 WASDE report was right here. And, of course, set this market up to this area here. So on a weekly chart, you see the price action. You see the range the market was in. Here you see some choppiness here, but the market did come up. Now, what's that reflective of? Here you see the large spec in the commercials, where the commercials are actually above large spec. Now, what's happening? Well, you do have selling and buying going on by our swap dealer friends and our true commercials. Not much happening with managed money. So as managed money does start adding to their net longs, the market does come up. And as you see this take place right in here, as what we call commercial spec get over large spec, the market comes down. And look how weak the market gets when commercials on the legacy report are up here. There's an awful lot of buying by the swap dealers, as you can see here. Nothing really happening between managed money and true commercials. Of course, you want to catch this move up, watch for this. Now, we do see swap dealers adding to their net longs again in here. And look where managed money is right now, again below zero, in the liquidation of shorts by true commercials. I use weekly charts to gauge trends. I use daily charts with technicals that I feel are the proper tools for successful trading. And I show you these on charts every day. So that's it for today's special grain report. I hope this report helps you get through this choppy time in the grain markets. And I hope this report helps you make money in your trades. If you're not a current Trends and Futures subscriber to see how Trends and Futures can assist you in catching the major trends year after year in all the markets, take a 30-day trial at www.trendsandfutures.com, or feel free to contact me, Gary Kamen, at gary@trendsandfutures.com. Also, to my current customers, if you don't feel you're fully utilizing the tools at Trends and Futures, email me at gary@trendsandfutures.com and I'll assist you any way I can. So until we talk again, have a prosperous Tuesday. And as always, the most important thing is for you to be well, then you could trade well and follow the trends.